And so here are the fucking maths. Where do I get this idea that Bitcoin could hit $1 million? So if we think about QE for poor people, banks lending more into the real economy, I estimate that that could be up to $3 trillion of bank credit that will be created between now and 2028. The statistic to look for is on the weekly Federal Reserve balance sheet, other deposits and liabilities. We'll see that happening there. If the banks are allowed to buy treasury bonds, it's estimated that $900 billion of foreign demand could evaporate. And that has to be replaced by commercial banks who now can buy these treasuries with infinite leverage. And finally, let's free Fannie and Freddie and bring $5 trillion of liquidity to the markets, which gets us close to $9 trillion printed or between now and 2028. And let's put this into context. During COVID, the COVID stimulus programs and all the aid that was given to the financial sector within the United States totaled about $4 trillion. And from the lows of March of 2020 to 70,000 in 2021 in November, we went up about 10x. Remember, price is set on the margin. It matters about the much larger marginal price, not the whole stock. And so if we have less Bitcoin on exchanges due to ETF demand, and we're printing double the amount of money between now and 2028 than when we did till COVID, then Bitcoin $1 million is just easy.
Arthur Hayes doesn't mince words when he lays out a vision of massive liquidity, monetary manipulation, and political inevitability, all of which he says make a seven-figure Bitcoin price not just likely, but mathematically obvious. The secret ingredient? Not hype, not hope, just cold, hard math. He argues that when you combine irresponsible fiscal policy with deliberate inflation, something has to give. And that something, he claims, will be the value of fiat currencies. Meanwhile, Bitcoin, with its fixed supply, is just sitting there, waiting.
And I think a lot of people make a lot of mistakes because they expect the past to be the definitive guide for the future, especially we're expecting some sort of central bank money printing, and there will be money printing. It's just it will be a bit different this time. So I want to talk about the United States because they're one of the largest offenders in this game, but everybody plays the same game. And we're going to talk a little bit about what's going to happen over the next, I think, 3 years, and why the amount of money printing that's going to happen between now and 2028 is going to dwarf what we saw during the 2020 to 2022 COVID period.
The phrase, "this time is different," is often met with skepticism, but Hayes insists that this new wave of money creation will be uniquely aggressive. The traditional anchors of monetary policy have been cut loose. The U.S. is facing skyrocketing deficits and a dwindling appetite for its debt. In response, the printing presses are already warming up. According to Hayes, the last round of stimulus lit a fire under Bitcoin. The next one could launch it into orbit.
So why are bonds shitty investments? Well, here in yellow, this is a chart of the total amount of U.S. Treasury debt, and I started it in 2017. And what you can see here is it's indexed at 100, and the supply of debt has gone up by about 80%. And then I index this against the TLT, which is the ETF of long-term bond treasuries, divided by the NASDAQ 100. And so if the chart's going down, that means the NASDAQ is outperforming bonds. And so the outperformance of the NASDAQ is about 80% from 2017 until the present. So yes, you might have made money owning bonds on your coupon, but if you put your money in the stock market, you would have made 80% more. Okay, let's look at the same chart versus gold. Similar story. If you had not owned a US Treasury bond and bought gold instead, you would have outperformed by about 80%. Now, obviously, this is not a gold or stock conference. We're here to talk about fucking Bitcoin. So what is this performance versus Bitcoin? And it's even more dramatic. It's about like 99.
The pitch is simple. If you want your capital to grow, bonds are not the answer, not stocks, not even gold. Hayes emphasizes that in a world flooded with printed money, Bitcoin is the asset that has most consistently outperformed. It's not theoretical, it's already happened, and he's betting it will happen again.
And so while there are many investment professionals who stand up and they'll tell you, hey, I think the bond market is going to do well over the next year or 2 years, what have you, that might be true. You might actually make money owning bonds, but you'll make more money owning other things. And the goal of investing is to maximize the amount of money you make given the current circumstances.
In Hayes's view, sticking with bonds in this environment is like bringing a knife to a gunfight. Even if they deliver a return, it pales in comparison to what's happening in crypto. The smart money, he argues, should be flowing where the asymmetrical upside is. And right now, that means Bitcoin.
If they're not going to be able to cut the deficit meaningfully, how do you make the books balance? And recently, Scott Besson has gone on a media tour and talked about how he's focused on growth. He's all in on growth. And so what does that mean if you're running a massive deficit? That means that you need to get nominal GDP above your cost of interest, which is very difficult to do unless you're going to up the amount of credit in the economy.
With deficit reduction off the table, the US is left with one tool: more credit, more debt, more spending, more stimulus. Hayes breaks it down like a seasoned trader. GDP growth now depends less on productivity and more on how much funny money the government is willing to inject into the system. And each injection, he says, pushes Bitcoin closer to that $1 million mark.
If we want to understand what the Trump administration, and I think any administration would do given these mathematical facts, we have to understand that this economy depends on credit. And so if you're willing to put more credit into the system, then you'll get any growth target that you want.
Here, Hayes is blunt. Political parties don't matter. The numbers rule everything. Whether red or blue, whoever is in charge will choose the path of least resistance: credit expansion. That's the only way to sustain growth without collapsing under the weight of interest payments. And again, more credit means more debasement and a stronger Bitcoin.
Maybe that's Bitcoin and crypto. A very accommodative stance from the politicians to say, hey, we want the crypto bros and girls to get very wealthy, pay capital gains taxes, spend a lot of money, and increase economic performance.
What once seemed like a regulatory war on crypto might turn into a political pivot. Hayes suggests that politicians might actually start cheering for Bitcoin, because every new millionaire is a new taxpayer. Every token cashed out for Lamborghinis or homes in Miami boosts GDP. It's cynical, but effective.
Inflation is necessary for the government to afford this massive debt pile that it has. So we are going to get inflation, and obviously people in this room understand that Bitcoin is the best hedge against that, but we need to spread this message around the world.
Inflation, once seen as a failure of economic policy, is now quietly becoming the plan. Hayes isn't the only one warning about this, but few are as unapologetically candid. For him, inflation isn't just coming, it's required. And when that inflation hits, Bitcoin's limited supply becomes its superpower.
Foreigners must pay is good politics, right? If you're going to go out to the voters and say, I'm going to give you something, obviously it'd be great if somebody else was paying for it. That's just how politics works around the world. So back in 1984, because the US government had another problem, same problem, how do we get people to buy our debt? And this is at a time when the 30-year treasury is trading at about 12% yield. They said, hey, why don't we exempt foreign owners of bonds from withholding taxes? Now, if you're an American, all the interest that you receive from owning a treasury bond is taxed at a particular rate. I think it's between 20 and 30%. And right now, if you're a foreigner, you don't have to pay that. So there is talk now about rescinding that exemption to do a few things. First, it could raise over $1 trillion over a decade by basically taxing foreigners on the income that they receive.
If America starts taxing foreign holders of its debt, it risks pushing them away altogether. Hayes points out that this isn't just a hypothetical, it's being openly discussed. But if foreign buyers walk, someone has to step in. That someone, he believes, will be the money printer.
So if I remove this exemption, it allows commercial banks to buy treasury bonds with infinite leverage. And when they can do that, their profits soar because they pay very low rates on commercial deposits. And obviously, smiling Jamie Dimon would very much love this to happen. And he has said this on many occasions that he believes that the banking system needs this exemption. And as I always say, Jamie Dimon gets what Jamie Dimon wants.
The next big buyer of U.S. debt, Hayes says, won't be China or Japan. It'll be the U.S. banking sector, armed with unlimited leverage. This banking bonanza will pump trillions into the system. Hayes calls it what it is, inflation fuel. And Bitcoin, again, is the dry powder waiting to ignite. We've followed Arthur Hayes down the rabbit hole of credit cycles, policy manipulation, and economic sleight of hand. His thesis isn't based on wild speculation or wishful thinking. It's a blunt reading of political behavior and financial math. If governments can't stop spending and debt keeps ballooning, they only have one lever left to pull: print more money. And when they do, Hayes believes Bitcoin will rise, not as a rebellion, but as a direct result.
And from the lows of March of 2020 to 70,000 in 2021 in November, we went up about 10x. Remember, price is set on the margin. It matters about the much larger marginal price, not the whole stock. And so if we have less Bitcoin on exchanges due to ETF demand, and we're printing double the amount of money between now and 2028 than what we did till COVID, then Bitcoin $1 million is just easy.
What do you think? Will this next wave of monetary madness really push Bitcoin to $1 million? Or is Hayes just selling a dream? Let us know in the comments down below.